You're welcome to this channel. In this particular episode, this is actually going to be the episode 2. The first episode on the Deriv platform was actually about creating an account and also how to log in your account details on the MT5 app. And if you haven't seen that and you're confused about how I got to actually log in into my account and see all the different pairs I can trade, you need to actually refer back to that video guide, right? But then here's exactly a demo account that we want to use in practicing. Now, the first thing I'll be doing right in this second episode is to show you exactly how to just navigate around for now, how to navigate around, and also how to open and close a trade will be coming right in this video as well. And the second thing I'll be doing right here is to also point out some few pairs I prefer or I love trading. But remember to like this video as you're watching. All right, so let's just get to it. First thing you need to take note of right here is actually these codes you have right there. And right on this place you can see all the different trading pairs, all the different markets you can actually trade in, all the different pairs you can trade right under the codes. And on this same page you can actually delete all the ones you have here. If these are not the pairs you want to trade, you can actually delete all of them and replace them with the pairs you love trading. And that's actually the first thing I will advise every single person to do. So here's what you're going to be doing. Look at the top where you have the pen, click on that pen, and you're going to be clicking on the delete button you have right at the top there. Just click on that delete button and select every single thing you have right there by clicking on this. You can see that right at the top. And if you want to be selecting them one after the other, just go ahead and click. But since I want to delete everything, I'm going to go ahead and click on this one right at the top. And you can see I've marked all of them. And after marking all of them, go ahead and click on that bin button, that waste bin button. Click on that. And automatically I've deleted all of them, right? So go ahead and click on this plus you have right there. Let's add our favorite pair. For those who love trading volatility, you can click on this volatility and add some of the pairs you love trading right there. Okay, but then if what you want to trade like me are boom and crash, you go ahead and click on these boom and crash indices. You can see the different boom and crash indices that I have right there. So I'm going to go ahead and choose this boom 1000, boom 500, crash 500, and crash 300. You can see more boom and has actually been added to this. That's boom 900, boom 600, crash 900, and crash 600. But here is a major thing you need to take note of. While we are doing some of these things, I'll be adding some tips you actually need to take note of as well. All right, so by understanding how to trade one or two pairs, it will be much easier for you to understand how to trade the others. Right now I'm just going to go ahead and add boom 1500, and you just add by simply clicking. All right, so I want to add this one, so I'm just going to go ahead and click. You can see that has been added successfully. I'm going to go ahead and click on crash 300. If you want to add boom 300, you go ahead and click on it, 900 and 600 as the case may be. Then you're going to click on this back arrow. Okay, so just click on that and return back again by clicking on that back arrow. And after returning back, if you notice, I still have a pair that I don't really want to even see right here. So for you to actually remove this particular pair, you have to open any other pair. So just click on that boom 1000 or anyone you have there, anyone actually, and you click on chart. Then you return back to where you have the codes below, and right on this code you go ahead and click just the way you deleted the other ones. Click on that pen and click on the delete button, and this time around you just select just the first one, and then you click on the delete button to remove that. You can see I've removed that, so return back right now. Just as I said, this particular one is just like an intro where I'll be showing you the general overview and also some of the little tips you need to take note of. And right here are all the pairs I love trading, so you can take note of that. And you mustn't just like or love what I love trading. You can actually just learn this just for the sake of developing your own skills, or for the sake of getting to understand the market, and also knowing exactly how you yourself can come up with a strategy even better than the one I'm going to be giving you. All right. So what I'm going to be doing is just a guide into profitable trading. You can develop it into something else, or even develop it into trading other pairs, because this strategy also works for every other pair as well. That's actually the thing and the fact about it. It is very profitable and it works for every other one. You're going to be seeing that now the financial market is such a one that nobody can come and bamboozle you for any reason. For instance, if I say a strategy is working perfectly, you can refer back to the chart and check previous markets, because the markets are always there. The historical data are always there. Just like we have it in crypto, where you can check how the chart of Bitcoin has been, or how the value of Bitcoin has been right from the beginning till date, right from 2011 till date. That's exactly the same way it is, even in the forex market as well. You can simply check what has been happening. So if I said it's working and it's not working, you will know by yourself. So it's not something that someone can say this is working and it's actually not working. And right in this academy, we are not making use of anything indicator. So if you're coming in thinking we will be making use of indicators, you are actually going to be disappointed, because we are not going to be making use of even moving average. That's a fact. Now, I'm not saying indicators are not good. Indicators are fair, but they are not too good. That's the way I would just put it. They can give you fair trading opportunities, but they can't give you their best trading opportunities. That is just a fact. We've been here before, we've lost, we've made gains. So you need to understand when I'm speaking using some of these statements. All right, we've lost so much, we've made so much as well. And the reason why you actually need to pay much attention is so that you won't end up making some of the mistakes we made. All right. I'm just going to go ahead and show you some of these other ones. Right here, I've showed you some of the pairs that I actually like trading. And here is another thing you need to pay attention to, that you have right there, where you have the charts. And the chart, just as you can see, helps you to see a particular pair that you have opened before. And you can see that right at the top left. I'm on a chart of Boom 1000 currently. That's B1K. I either call it B1K, Boom 1000, or whatever name you want to call that. So the chart is literally where you check what you want to do. We'll be coming back to this chart much later in this video as well. But let's just go ahead and check other things before we return back here. And the next thing you want to know is a trade. So click on the trade. Now on this trading section, you tend to see exactly some of the trades you've opened before. If you open any trade right now, right in this video, I also told you that I'll be showing you exactly how to open and close trades as well. Okay, so just relax and stay tuned as we continue in this journey. And I'm going straight to the point and not trying to bore you with too many unnecessary talks. And I'm trying as much as possible to make this very easy in probably a layman's language, whereby even people coming into the forex space for the very first time can start laying their hands trading something. All right. Now, right on these trades, you can see exactly your balance. If you have any opened trade that you've opened that you've not closed, you will be seeing them right here as well. Okay. Now, the next thing you want to pay attention to is what you have right there, the history. Now the history is where you keep track of both your deposit, your withdrawals, and every single trade you've been doing. For instance, probably when I start doing the trade, I'll come back here and still show you as well. If I've done trading for like probably 2 3 days and I want to check the previous trades that I've done, if I've made profit or loss, I'll simply come back to this history section. You can see I just created the demo account, and you can see when I created it as well, the date and the time of even this particular deposit is reflecting right under the history. So that's actually what it simply means. Now, if I want to check the previous trades that I've made, either previous trades, deposit, withdrawals, I'll go ahead and click on that icon, and right here you can see where you have today. So this is every single thing that I've done today. If I want to check for last week, I'll go ahead and click on last week. But what if I want to check for just 3 days ago? I'm just going to go ahead and click on this costume below. So you click on the costume and you'll be choosing your start date. Since I want to check for 3 days ago, I'll just click on this 15. That's the start date, and the end date will be today. Just click on that, and then you click on OK below. Since this is a new account, there's literally nothing right here at this moment. All right, now let's go ahead to our chart. These messages are nothing special, so just go ahead and ignore that. So let's go back to our chart, and right now we are still on the same chart of BOM 1000, as you can see. And here are some of the things you need to take note of as someone coming in to the forex space the very first time. Remember what I said? I said I'm going to be sharing some tips as we progress with the lessons, because normally I'm actually meant to do an intro video sharing some of the do's and don'ts of forex trading, but I decided to just jump into the main thing because I believe some of you will understand better if some of the tips are shared during the lessons. All right, so naturally the way it's meant to be is that I'm meant to take a whole session to share the rules, the things you must do, the things you mustn't even do, some of the mistakes you should never make. But then it is much better if I'm sharing that while the lessons are actually ongoing. All right, now if you look right here on the chart, you can see literally many of you may be coming in right now and you don't even understand anything. I believe you must have been seeing charts before and everything has just been looking strange to you. You don't need to worry about that. You will get to understand how to study charts even right in this academy as well. And as we progress with the episodes, remember this is just the episode 2, so more are still coming on exactly how to actually trade these pairs. Right now, this M5 you're seeing simply means 5 minutes candle or 5 minutes time frame. You don't need to bother about this jargon. You'll get to understand some of these jargons much later as we progress. All right, so just stay with me. Now let me zoom this in a little bit, and after zooming in you can see some things moving right on your chart, and you may be wondering what are they exactly. Now these particular ones you're seeing in red and green, they are all known as candles. Okay, now remember I said the M5 you have right there is either known as M5, which is 5 minutes time frame, or 5 minutes candle. So that's actually what it means. All right, now, and I just said right now that these green and red you have are all known as candles. Now the M5 you're seeing right at the top simply means this particular candle that you're seeing right here, the whole of this green, it simply means it took 5 minutes for that particular candle to be formed. That's exactly what this M5 simply means. All right, and each of these red you're seeing, you can see after every candle there is a little space or gap in between. Every single candles that you're seeing right there, they are all candles. It simply means they were all formed in 5 minutes. Now, the next thing you need to take note of is exactly some of the simple tools we make use of while trading. All right. So, what are the simple tools we make use of while trading? Tap the center of your screen anywhere, either center or here or wherever. Just tap. You can see the M5 that I actually showed you right now is actually the one that is being selected or highlighted. And as you can see, what I have right there is M5. So what it simply means is that if I want to change this my candle formation, I can decide to change it to M1, to M15, M30, that's 30 minutes candle or 30 minutes time frame, or 1 hour or 4 hours or 1 day or 1 week, 1 month or month. So it all depends on what you're looking out for right in the chart. When we come to exactly the strategy I use in trading, I will share with you when best to use these time frames. Okay. But what I use mostly in taking trades, since I don't use indicators, I mostly use lines, drawing of lines. All right. Now, when you want to draw a line, for instance, what exactly do you make use of? Here's exactly what you make use of in drawing lines. You can see these shapes that you have right there. That's the shapes. So just go ahead and click on that, and you can see the different shapes you have right here. And the shape that I love using most is actually this one right there. That's the horizontal line. So just click on that and you drop it anywhere on the screen. When we go into the strategy I use in trading, I'll also show you exactly when and where to place the lines. All right, this particular one is just an intro into the main thing that we'll be looking at probably next week. All right. Now, here's another thing you need to take note of. If you look at the top, you have your cross share. Now, you use your cross share probably for too many things, actually. It depends on exactly what you want to use it for. Some people use it for calculating pips, some for it all depends on you, actually. And as we progress, you also get to know some of the things we use the cross share for, apart from just probably accurately calculating pips and the rest. And when I say pips, it's simply price movements. Probably I'll be using certain words that will make it much more easier for people that are just coming into the forex space for the first time. So I will just avoid using some ambiguous words or phrases. Next thing you need to take note of is this one that you have right there. And this one is simply for indicators. For those who love using indicators, you can just go ahead and click on the plus you have right there and start adding any indicator you want to add. But I don't even want to show you this because I don't make use of indicators. And in order not to waste much of our time, let me go to the one that is more necessary. And here's the next one you need to actually take note of. And right among all these things right at the top, the one that I use most are just this first one and the last one. And everybody uses this last one. That one is by default. In fact, everybody uses this first one and the last one. And the other ones, probably they are not even, and the other ones are not really necessary because there are other better ways of doing them. Okay. So now this last one is just for opening and closing trades. So right here, I will show you exactly how to open and close trades. But before I show you that, let me quickly show you this as well. Now, if you look at the right hand side here from top to bottom or from up down, you will notice that there are some figures right there. And someone may be asking, what are these figures for? Now, these figures actually represents the value of the pair per time. All right. Like for now, if you look at the market currently, here is where the market is. And that is why you're seeing this green right here. You're seeing this line and you're seeing the green. Okay. So now If you're seeing this, it simply means this is exactly where the market is. And if you pay attention to that green closely, you would notice that it is actually moving. If you notice, it's actually moving. So that's what you need to notice. So that simply means the market currently is within this region. So all what you have here are just the values of the pair that you have opened currently. Now, if I switch this to another pair, you can either click. Now, there are actually two ways you can switch pairs. Either you return back to quotes. Let's use that first. And you click on, as we want to switch to boom 500, we'll click on this. And we are clicking on chart. It will open the boom 500 for you, just as you can see right here. And if you can also look at the left hand side here as well, it is also showing you the value of boom 500, the values. And here is where boom 500 is currently. And you can see that also moving. Okay, so that's actually how to switch. And the second way you can switch between different pairs even much faster is by simply clicking on this boom 500 itself that you have right at the top left. So just click on that, and after clicking you can see boom 1500 and everything. So if I want to return back to boom 1000, I'll just go ahead and click on that right there, and as you can see, I've returned back to boom 1000. If you want to switch to another pair, this is actually the shortest way to switch. If you want to go through the longest route, you use and switch from the codes. Right now, the last thing which you actually need to note right here is this. Go ahead and click on that if you want to take trades. All right, so just click on that. Now it could either be opening trade or opening a position. People can use the word in different ways. Now, yes, exactly what you must notice in forex trading or in the financial market. There are different adjectives used in qualifying many things. For instance, someone can come and use a particular word to represent something else, and another person can come and use the word and use another word to represent that same thing. So you shouldn't be confused when you have different people using certain words to qualify something. The major thing you should know is exactly what they are talking about. And that's actually the essence of learning. All right. Now I'm clicking on that to open a position. In the forex market, you can make money by buying and also by selling, because the main way you make money from the forex market is by prediction. If you predict correctly, you win. If you predict wrongly, you lose. Now, there are two sides of prediction. If you predict that the market will go up, you buy. When the market eventually goes up, you end up making your profit if you bought. And if you predict that the market is coming down and you sell, when the market eventually comes down, you are automatically in profit. So in the forex market, you make money by simply predicting. So what will be coming much in later episodes are ways you can actually make better predictions. If you're opening a position, first, what is the kind of position you want to open? Is it a buy or a sell? Are we predicting that the market will go up? If we are predicting that the market will go up, we'll go ahead and buy. And another thing you need to take note of before buying is your lot size, what you have right at the center. Now, this lot size is so important because it determines the ratio or the portion of your capital being engaged in the market per time when you open a trade. And that is also what determines the quantity or the size of your profit. Now, remember what I said about the lot size again. It is what determines the quantity of capital you engage in the market or in a particular trade. And it is also what determines the quantity or the size of your profit and also the size of your losses, as the case may be. Because remember, we said if you predict correctly, you win. If you predict wrongly, you lose. Now, if you predict correctly and you use a smaller lot size, like this is actually the minimum lot size for this BOM 1000, you can't use less than this. If you predict that the market is going to move 20 pips up, that will be 20 times 0.2 lot size that you're using, that you have right there. And if the market eventually moves 20 pips up, you eventually make $2. But then what if you said the market is going to go up and eventually started going down by the same 20 pips or even more? You end up losing that same $2. Now, what if you're using a lot size of probably one, let me say one for instance, and you said the market is going to go down by 20 pips? What if the market started buying even more than 20 pips? Because you can actually have that spike going even 50 to 100. What it simply means is that you're going to be losing up to $20. If the market goes 20 pips in your direction, you gain 20 pips profit. But the market goes against you by 20 pips or more, you lose $20 or more. That's exactly how it is. So the losses you make or the profits you make also depends on the lot size you use. As you're starting, I will advise, please make use of 0.2. Every financial market poses a certain level of risk. There is no market that is not being manipulated. That is a fact. Gold market, if you're trading currency, commodity, because this is actually synthetic, there are different aspects of the forex market or the forex trading. We have the commodity, we have the currency, we have every other one that you have out there. But then the one we choose to focus on are the synthetic aspect, which means all this boom and crash you're seeing me trading or volatility that you may likely want to like trading, they are all under synthetic trading or pairs. It all depends on the language you choose to use. Just as I said earlier, every single market is being manipulated. When gold is being manipulated, sometimes people can end up, probably if you've been following some news, you've noticed some persons at the time, they ended up blowing thousands upon thousands of accounts trading gold or trading. So markets are being manipulated. So that's what you must note. The market poses some certain level of risk. And having studied the risk over time, that is what now brought me to the conclusion of some of the strategies I decided to start using, which has actually been working very well. And if you come in as well, you check your chart and you see that as well, you will know it is not something that people need to convince you about. It is what you yourself you will know by simply checking the chart for yourself. How to check the chart will be probably coming up the next week. All right. Now this particular one is just to make you know that there are manipulations here and there in the financial market. And I'm actually taking my time to say this so that you won't be using unnecessary lot size just because of the quick gain you want to make. All right. I needed to say that because we are on this lot size matter. The mistake many make is that they make some people also make the mistake of saying I make so much money on my demo. When I come to my real account, I start blowing my money. Here is what you must know. When you're trading on your demo, you have $10,000 to play with. When you want to go to your real account or your live account, many of you are going with $10, $20, and you are taking the risk you're taking on $10,000 account like this on the same $10, $20 account. Does that look wise to you? No. So that is why some very insensitive people or some people that can't even think or reason well will be saying, how come I'm making so much money on my demo? My demo sometimes will be on trade for probably 2-3 weeks. It's not crashing. And When I open my account on just $20, $30, I'm using this big lot size that I was using on my demo, and I'm crashing my $20, $30. You must definitely crash it. Because for instance, assuming, let me just open a trade and show us something. Now I needed to do this because this is actually a learning. We are learning. All right. Now assuming I'm opening, let me use two lot size to open this trade. I just want to use this as an example. All right. So I'm changing that 0.2 to 2. Now this is very huge and unnecessary lot size. And I don't even want anybody to start with this. But this is just an example. Now assuming I'm buying, let me just buy. Now when you click on the buy, for the very first time you're clicking on a buy, if you notice, you're being asked to approve something. Yes, another thing you must take note of before you approve this, please. I don't even want you to approve this for any reason. Now look at what you have right there. And you will be asked this if you're trading this for the very first time. You can, this is one click trading. Never approve one click trading. Let me approve that so you can see. I'll disable it later on as well, right? I'm approving the one click trading just to explain. Then you click on OK below. Now when I've approved it, right? Now one click trading simply means when I click on buy or sell, automatically it buys and sell. There is no second confirmation. What simply means is that if I mistakenly click on buy and I didn't even see that on time to quickly close it, automatically my account will be crashed if the trade doesn't go in my direction, because it is one click trading. When you click on, for instance, you can say I've actually set up the one click trading already. So I'm just going to go ahead and click on buy. Assuming now it was by mistake, I was just trying to probably zoom in and out, and my hand mistakenly pressed buy, and I wasn't paying attention to check, because immediately I click on buy, if you check something on my screen, something is showing right on my screen, buy. Assuming I didn't even see this, to quickly go to my trade right here and close it since it was a mistake. Assuming I didn't see it, and probably I left, probably I've just zoomed in out and I'm done with whatever I'm thinking I have done and just left and return back. If the trade eventually goes against me, it is automatically gonna crash the account if the capital is not much. And if the capital is much, you're going to be losing heavily as well. All right. So that's what you must know. And that's the reason why I don't even advise one click trading. Because right now, if I click on sell, I don't have any option of confirming whether I really wanted to sell or not. But let's just go ahead and stop this particular trade before I show you how to disable the one click trade in case you mistakenly enable it. So let's close this trade. Now, I've actually showed you how to open trade already. But what I've done, or how to open trade or open position, remember I said they are the same. So if you want to close a trade or close a position, click on trade and click, you can say these are all in losses. Now click and hold this first one, just click and hold, and you can see where you have close position. Click on that and look down, you can see close with loss. Just go ahead and click on that. So which means we've closed this position. Now let's close this other one as well. Click and hold. You can see close position. Now you can either click and hold or you slide to the left. That is, you slide to this side. Anyone, either you're clicking and holding to get this option or you slide to the left. So I'm sliding to the left and clicking on this to close the position. So it all depends on you actually, right? Then you close this with either profit or loss depending on whatever you have right there. Now I've closed it and you can say done, and you can see there are no pending trades. And if you check your history, the trades that I've done are right there. The loss that I made right now and the profit that I made right now. Now the reason why I even did this opening and closing of a trade was to explain the one click trading of a thing. Now let's return back to this place and disable our one click trading. Now right here, you're going to be clicking on these settings. All right. So just go ahead and click on any of these trading pair and hold it. Now, after holding, you can see where you have properties. Go ahead and click on that properties. Now, right here under the codes, look at the top left where you have the codes. Click on that, and you can see where you have settings. Click on that settings, and you can see one click trading enabled. Go ahead and disable it. I've disabled that. Now return back to your charts below. Let's open another trade and let's see. So to open a trade, go ahead and click on buy or sell depending on your prediction. So I'm using anyone actually. I'm using buy. Now assuming I mistakenly click buy now, assuming, did you notice that I still have the second chance or second opportunity to check the size of lot size I'm using and whether I really want to buy or sell? I think you noticed that. So this makes it much safer for me than one click trading where I don't even have any opportunity of verifying the lot size that I'm using to verify whether I really wanted to buy or sell. All right. So that is the reason why you don't enable the one click trading. And that's exactly how to disable it in case you mistakenly enable it. Right. So I just needed to say this so that you won't be suffering irrecoverable losses or losses that will be taking you more time to recover from. These are simple mistakes people make in trading. Now, here's another thing you want to do. Remember, I was trying to say something. Some reasons why people make money on demo and they don't make money on the real account. The reason is because they use unnecessary lot size. Another reason is because the capital size. When they were trading big account, $10,000 account, they were trading it with confidence and no single fear of losing because the capital was much. Now, assuming you're using 0.2 right here on this $10,000 capital, it is, in fact, it is even too small. But because I know and I don't advise, and because there is no way when you're starting off as a trader, you will immediately fund with $10,000, it won't be sensible at all. So I will advise start with the least lot size. Now, starting with the least lot size will help you curb your appetite for unnecessary gain. Because this is another reason why people lose money in the forex market. Appetite for unnecessary gain. Now, the reason why I'm sharing these tips is because I said it earlier that instead of taking longer time to separate the episode of having introduction covering do's and don'ts, I decided to chip them in right as we go in the lessons just for better practicals and better understanding. All right. So just stay with me as we proceed. So some of the reasons why you make money in your demo and lose on your reel is unnecessary appetite for gains. Another reason may likely be the fact that you're just too greedy. There are people that are too greedy. They don't want to allow um, opportunities that they have missed. They don't really want to allow them go. You miss opportunity, for instance, you come right on. Like I think even today I saw some, or a few days ago I saw some stuff that I missed, and then I was just like, wow, I've missed some of them because of my busy schedules and the rest. But coming to trade at that particular time is very risky because you've missed them. Like some of us are very much engaged, even sometimes in 2 3 weeks we're not trading because by the time we come, the opportunity has passed. And that is why you now need to have another source of income. Because some of the reasons why people take unnecessary risk in trading is simply because they actually do not have other sources of income, which is very risky. and that can put so much burden or pressure on you that you will want to take some risk just to make withdrawals. So this is another reason why you make money on your demo and you lose on your real account. So make sure you minimize your appetite for risk. Don't take unnecessary risk. I can guarantee your win rate will not be less than 90%. All right. So that's exactly some of the little things that I needed to chip in. I've showed you exactly how to open a trade, and I've also showed you exactly how to close a trade. Probably let me just open one more trade, buy, and I'm clicking buy or sell any one of them actually just to open a trade. And after opening the trade, return back to where you have the trade, click on that, and then click and hold this, and then you click close position, and then you click on close with loss below. I've actually closed that trade. And if you want to track every single thing you've done, click on the history to check. Here's another thing I want to show you: how to set your stop loss and take profit. So that's another thing you will need to also take note of when trading. You click on charts. First, open a trade by either clicking on buy or sell, any one of them you want to do depending on your um trade. Now you can either decide to set stop loss before you actually open the trade, or you set it after you've opened the trade. But for many people, in fact for majority, they always open trades before setting stop loss and take profit. Now stop loss simply means if the market gets to that level, probably if the market goes against you or even in your favor, and it gets to a particular level, it will automatically cut off the trade for you, either in loss or profit. It all depends. For instance, assuming now, the reason why I'm using the word profit again is because people use stop loss even while they are in profit. Let me just quickly explain that so that you won't be confused. Now, assuming I predicted that the market is going to go ahead and sell very well, probably like 40 pips or 50 pips, and eventually the market keeps selling, and I decided to extend. Now let me just do that setting so that you will see that. So click on buy. Let me eventually buy. Let me actually buy. Let me buy first, just to show us that now I've bought. Now how do I set my stop loss and take profit? Now since I'm buying, what it simply means is that I'm predicting that the market will go up in my favor. Now, how many pips are you predicting the market to go up? Let's assume 20 pips. Now, what you're going to be doing is this: add 20 to what you have right there. This price you have right there. Then this is 19487. Now, add 20 to that. That will be 19507. That's 20 pips. All right. So I'm going to be clicking on where I have trades, and I'm going to be clicking and holding this, and click on modify, since what I want to do is to set my take profit. First, I want to set my take profit. Okay, so modify, and where you have take profit, you're going to be setting that to 19507 because I'm predicting that the market will go up. So I'll click on modify below. You can see where I have modify below. Click on that, and that has been done. Now click on the chart and check. If you notice, right on my chart, you can see where my take profit is. You can see TP right there as well, and you can see the line for my take profit. Now this simply means if there is a spike or if there is a buy and the market gets to this level, automatically it will close the trade for me in profit without me even coming to come and close the trade manually. So that's the benefit of take profit. Now stop loss can be used in two ways. You can see take profit can only be used. Now stop loss as well can also be used in two. Now stop loss can be used in two ways. Either to limit the extent of your losses or to limit the extent of your profit. Now, here's exactly what I mean by that. Now, I've set take profit quite all right. Now, I want to set stop loss. Assuming I actually set now for this particular second example of stop loss that I want to use, I want to use I want to increase my take profit time to probably this level just to show something much in a better way. So I'm increasing that. So I'm clicking on trade and then I'm clicking on and holding this and modify. There are other ways you can modify, right? But I'm just showing you this with time. You'll get to understand others on your own. What I'm just showing you are just the ones you should take note of. So I'm increasing this to 600. That's 19,600. Now, it simply means when the market gets to this level, it will automatically close the trade in profit for me based on this take profit that I have right there. If I want to set stop loss, for instance, my stop loss can be into now. If I want to set my stop loss, for instance, I can set my stop loss right here that if the market gets to this level, probably if the market goes 20 pips against me, it should automatically close the trade. How do I do that? Simply set your stop loss right here. And what's the price right there? Just simply remember I said I want to set a stop loss of probably 20 pips or 20 price movements. So simply minus 20 from this. So 1948. Now my entry price was 19488. So just take away 20 from that. That will be 19468. So modify this again. And where you have stop loss right there, you type 19468. So click on modify below. And after modifying, return back to the chart. You can see where I have my stop loss right there, SL stop loss. And you can see the line right there. It simply means when the market gets to this level, automatically it is going to close this trade for me in losses or in a loss in order to minimize the extent of the losses in case this selling wants to continue against me, or in case the selling wants to continue further, since what I predicted was a buy and the market refused to buy up to 20 pips. Let this trade automatically close for me in a little loss. Now, if you're using 0.2 lot size, that will be $2 loss. That's 20 times 2, $2. All right. But then if you're using a bigger lot size as well, multiply that by the movement or the price movement you're using. If I'm using one lot size, for instance, for this, it will be $20. So just understand that better. Now, another time people use stop loss is this. Assuming the market starts buying the same way I predicted and it gets to this level, I predicted that the market was going to buy quite all right, right? Now, assuming it actually started buying and the market eventually gets to probably 19,576 right here, this level. Note that it won't close the trade automatically for me if it doesn't get to this 19,600. But now, assuming the market now gets to this 19,576, I can actually adjust my stop loss to this level, to 19,553. Just take note of what I said again. Now, here's exactly where I predicted that the market was coming to. Now, assuming the market now gets to 19,576 and it hasn't gotten to where I predicted, this will not automatically close the trade in profit for me. So in this case, since the market hasn't gotten to my desired destination, I can readjust this stop loss that I have and shift it up here so that I won't even have to experience any form of loss or losses. All right. Now, in that case, I will go ahead and set my stop loss right there. Just simply go to where you have the trade, click here and modify. You just change this probably to 956T and you click on modify below. Now, the reason why I can't modify this is stop loss is because the market is still against me. It's not in my favor, so I can't even modify it. But I just needed to explain that and add it to this in case someone may be asking, is there no way I can do it if the market hasn't gotten to where I want it to be, but then it's closer? Is there any way I can minimize, probably not even losing at all? But in this case, where the market hasn't even gotten to exactly where I wanted it to be, I am still in a loss. But what if the market enters profit, but it hasn't gotten to my desired destination? You can simply adjust your stop loss. If you want, you can manually close the trade by yourself. But if you still believe that it's going to get to exactly where you predicted, you can just simply adjust your stop loss and bring it a little bit up. So that's exactly how it is. And if this video actually added a little value to you, make sure you also share it with someone else. Let someone else who need this knowledge get to see this info that you've gotten right now from this video. More things that you need to take note of will be shared in the coming episode. I've taken so much time just because this is almost like several weeks episode compressed in one. So what you've learned within these 45 minutes to 1 hour is exactly what will literally take several weeks. And that's the more reason you actually need to spend so much time in digesting this, listen over and over again till you understand every single bit of it. So please try as much as possible to understand this foundation, because I won't be returning back to this. We are progressing, we are moving forward. And for every single person you're adding newly to the academy, make sure you also share where we started from so that they won't be confused as we progress in these lessons. Remember to like this video, share it with others, and don't forget to subscribe to this channel.